Today we're going to talk about income statements. And over here we have a basic income statement with demo data. And at the top you have your sales or revenue. And over here they split it up into a bunch of different products that they're selling. And you can choose a lot of different ways to make the income statement. Some people have all of their sales into one account. Some people have it split by location or by product or service. So over here, they split it up so that they can see how much they're selling of each type, and then they have their total sales. Now, usually after sales, you have your cost of goods sold. So your cost of goods sold is something that a lot of small business owners forget about. And the cost of goods sold represents the direct costs that you incurred in order to deliver your service or to create your product. So it may have labor that you're using to create the product or the raw materials that you needed to build the product. So over here, they only have one cost of goods sold item. That's how much the cost of the artifacts were that they purchased, and then they were sold over here. So I would have expected them to have a cost for each of the different products that they're selling, but it's just demo data. And so after we have your cost of goods sold, you take your sales less your cost of goods sold, you have your gross profit. So why is gross profit important? Well, gross profit shows you how much earnings you have left to pay for all of your indirect costs, such as your marketing or different overhead. And when you look at your gross profit, what you can also tell is how much you're earning off of each sale. And that's important as you grow to understand, if I'm making additional sales, how much incremental revenue am I going to be generating, so that you can understand the impact of your actions if you were to invest in different things to increase your sales. And then we go down to our operating expenses. So the operating expenses are those indirect costs that are important for the business, but aren't directly related to creating the product or delivering the service. So you might have marketing, you might have back office salaries or professional fees, utilities or rent. And then after all your expenses, you're left with your net income. And everyone understands net income is what the cash that you have left after you pay all of your expenses. And so that can be used, either you can withdraw for your personal use, it can be used to invest more in the business, in equipment or working capital, or it can be used to pay down debt. So thank you very much for listening today. It would be great to hear if you have any operating expenses that really in your business should really be considered cost of goods sold. Let me know in the comments.